Hello and welcome to another episode of Alpha Seekers with me, Glenn Hamilton. My guest today is one of those charismatic people who are instantly likeable and very easy to talk to, which I hope comes across during our 30-minute chat. Harry Heartfield is a partner and one of the founders of Addition Capital, an EIS investment manager specialising in the leisure sector. During our chat, we discuss how he had originally intended to pursue a career in law before chance circumstances steered him into the investment industry. We talk about how his early experiences in leisure, working for the family business during his teenage years, has helped him not just with running EIS funds, but also the other companies within Addition Capital stable. Harry explains exactly what he means by the term leisure, the challenges businesses faced during the pandemic, and how the survivors are now thriving like never before. We also discuss the prerequisites Harry looks for, how businesses have adapted to the cultural shifts in society, and iconic album covers. So please, sit back and enjoy Alpha Seekers with Harry Heartfield. Hello, Harry.
How are you today? Hang on.
I'm very good. Let's see. Oh, you turned on the video. Look at that. You have such beautiful offices.
Oh, they're just stunning, aren't they?
They look
thing of
great.
beauty. Yeah, they look good. They're a nightmare.
I specifically like the room with the guitar hanging up, obviously as a guitarist.
Yeah, it's a good room. I would be using it as well, but unfortunately, it turns out today trying to record this using a headphone as opposed to just doing it, au naturel, as it were. We've got one computer that has the right headphone setting. So I spent the last hour running around like a headless chicken going, oh my God, no, try that one, try that one, try that one.
It's fairly similar here, I have to say. But I was hoping you were going to be speaking to me from the room with the albums, the wall of albums. And for our listeners, let me just explain that when someone new joins Addition, they have to name their favourite album, and that album is put on the wall. Is that correct? And your favourite album, if I remember, is Rumours by Fleetwood Mac.
It is, yes. Not that you should trust the fact that the name is Rumours. That's, I'm not casting aspersions today or anything like that.
I was going to ask if there's any nostalgic reasons behind that, or are you just a big Fleetwood Mac fan?
Not massively. No, I just like the album. I think it's a good, solid album. It's also, to be brutally honest, it's one of those ones where when we went through it, I think we actually started doing it as a sort of process when we had about 8 employees, something like that, and everyone else had chosen theirs. And I suddenly realized that I needed to have an album that at least looked different to everything else, because there's quite a lot of very dark album covers on.
And someone had already taken Public Enemy, had they?
Yeah, pretty much. Yeah. And there's some very odd ones in there.
I was going to ask if there's any odd ones. Yeah.
We've got a first pressing limited edition from Aphex Twin. I have literally no idea. Honestly, you're about to ask follow-up questions. Please don't.
My specialist subjects in pub quizzes is music, but I haven't heard of them. Anyway, let's talk about Addition Capital. So you're an investment manager, principally an EIS manager, specialising in the leisure sector. And many managers obviously say that they have real expertise and a wealth of experience in the industry they're investing in. But you and your colleagues at Addition really do tick that box in a big way. Am I right in saying your dad was in the industry and you worked with him or for him in your teenage years?
For many moons, yes. So my father was and is a music promoter, started back in 1980, something like that. And I think I got to about the age of 14 or 15, and he turned to me and went, look, I'm done giving you pocket money. If you want any further cash, you're going to go and work. So I started out working on those kind of picnic shows, picnic concerts in stately homes across the K. And I did a kind of summer tour, and I enjoyed it. And then I did another summer tour, and then I loved it. And it just got, it gets under your skin, the music industry and the leisure sector more generally. So, I've done this now for a long time. And it's kind of, lots of people, I think, set out to become investment managers, fund managers. It's certainly not true for a lot of us, which I think kind of gives a slightly different approach. I myself, I had no intention of going into kind of investment management. I came out of university, wasn't quite sure what I wanted to do. And like all people who don't really know what they want to do at university, thought, I'll go and do another degree. And I had 6 months between the end of my first degree and the start of the next one. And I got an internship at another investment manager that backed one of my father's businesses at the time, principally to come in, help for a couple of weeks. They had a live entertainment fund.
This was Ingenious.
This was Ingenious, yeah. And came in, sat down, suddenly realized that actually some of the skills that I'd learned being on site were actually useful in a different context.
Yeah.
And I suddenly stayed for 3 months, and they went, "Do you fancy just staying on forever?" So I never went to law school. I've just continued doing this instead, and here we are.
You're just such a
12 years
likable
later.
guy as well, aren't you, Harry?
No, I'm deeply unlikable. I am deeply, deeply unlikable. But I was there.
I disagree.
I have to be honest. I was there. I was there exactly the right time. Some of the other senior members of the team at the time had to go out on a research trip. We had a nightclub in Ibiza, and they needed to go to a research trip. And I was left manning the fort, as it were, looking after one of the festivals.
You got the short straw, definitely there. I think.
Yeah. Well, it's either cocktails in the sunshine or a very, very rainy field just outside Brighton, and I got the rainy field just outside Brighton.
I mean, leisure is quite a generalisation, really, I suppose, isn't it? I mean, it's a big sector.
Yeah.
Tell me about your definition of leisure and how you class leisure as Edition as a company.
Yeah, I mean, the way we've defined leisure more, in its broadest sense, is really what you as individuals like spending your disposable income on. And that can encompass all sorts of things. It's kind of activities on your own, whether it's video games, watching TV, going to the cinema, whatever it happens to be, all the way through to kind of going out for drinks with friends, through to big, large-scale live entertainment, festivals, concerts, so everything in between. And for us, it's a sector we think is becoming increasingly important in the modern economy. I mean, some of your listeners will probably have heard of the rise of the experience economy, which is really about kind of younger generational cohorts. They want to spend more of their disposable income on doing things, taking part in experiences than owning things. And a little bit of that, I think, in reality, is to do with the fact that they are also generation rent. It's a bit easier to save up for a brand new fridge, freezer, or a house when you think you might eventually get on the property ladder. If you're a million miles away from it right now, if you're earning 25, 30,000 pounds and you're in the southeast of the country, it's difficult to get on that property ladder. Yes, so I think that there are kind of different macro factors that are driving that. But that in its broadest sense is what's kind of driving us. Is A, we think leisure is an interesting way to focus your kind of macro trends that are driving it. But B, we think there is a real sense that these patterns of consumption, once they get kind of embedded in you, it's a little bit like people going to Glastonbury.
Yeah.
Most people who go, listen, it's not everyone, but most people who go once want to go time after time. And there are lots of these different sectors within leisure that we think once they're into your bloodstream, they're pretty addictive. But I think what's important to note is that whilst there's a really, really broad range of what we consider leisure, we don't look at every area. We've kind of narrowed it down to kind of 4 key areas that we think A, fit from an EIS perspective, because that's our principal background is EIS, but B, also lend themselves to our particular skill set. Because there's no point in practical terms, kind of that starting conversation around our expertise and our actual practical background. There's no point having that practical background and then drifting miles off course.
Yes,
and kind of going, look, I've got lots of experience in live entertainment. How much of my time do I spend on live entertainment? Oh, no. None of it, none at all. So we really do try and focus on areas we think we can add real value to. So yeah, it's kind of 4 areas, which are live entertainment being a really important one, hospitality, fitness and well-being, and content and IP. So there are 4 different areas, but all of which we've got, 1 or 2 or 3 of the team have got real world practical experience in those areas.
I suppose 2 of those specifically, with hospitality and live entertainment, were quite seriously hit during the pandemic. I mean, how did your companies fare during the uncertainty of all those lockdowns and, I suppose, generating no revenue? Yeah,
I mean, it's interesting. It's been I think we've been. You're absolutely right. Let's start from the beginning on this one. You're absolutely right. They were absolutely very hard hit. And the first year, that kind of March 2020 through till, let's say, summer 21, when we kind of got through all of the major restrictions, was purely about survival. And, there were a lot of hard conversations, particularly early doors when we saw it coming down the road, whether we were going to have to make mass redundancies, whether the furlough scheme was going to work effectively enough, how we were going to deal with potentially postponing or cancelling huge festivals and concerts. That's a very different beast altogether. But in principle terms, we didn't lose a single business during that kind of acute COVID phase.
That's fantastic.
And a lot of that is to do with the fact that we immediately sat down as a team. I mean, we sat down as a team in late Feb, early March, before we had to then start sitting down in very separate locations for a long time. But we sat down as a team and kind of went, look, we've got to have a plan for this. And it was really interesting. We had, I think, 20 businesses, something around that order at the time. And what was fascinating to watch was how the different management teams responded. Some were, quite clearly, I'm not going to name names on this one. Some were like caught in headlights. They froze. They didn't know what to do. Some immediately leapt into action and kind of shut as much down, control costs as well as possible. And it was our job was to try and help them create a sensible plan that would allow them to come back to life when they could. But we were also supported, and the sector as a whole was really heavily supported by government schemes. So all sorts of furlough scheme was fantastic for us. There were sorts of cultural recovery funds that we managed to access for various of our businesses and help them pull together packages for them. And then the other real advantage was, and it was quite interesting watching it after each lockdown, every time you released a lockdown, what you saw was not a very nervous audience slowly and trepidatiously going through and going back. People were keen.
Straight down the pub.
Yeah, absolutely. And each time they got keener. So,
I'm nodding in recognition, and
No, I mean, listen, that first lockdown, people were a little slow. The second lockdown, that kind of funny little November lockdown, people knew we only had a couple of weeks before we were going to be locked down again. The third one was extraordinary, and it was then that following interesting year, that kind of 21 into 22 year. Particularly if we take those kind of sectors like hospitality and live entertainment. I mean, other sectors we were doing, content and IP, not really particularly impacted mostly.
Opportunities within there, I suppose.
Yeah, there were, but also, your challenge with kind of content, particularly if you're looking at something like TV production, was a lot of it got slowed down. It became very expensive.
Yes, of course.
So it depended on what kind of content you were creating there. But as soon as you released, you had this kind of pent up demand. And I know for a lot of people, COVID was a very, very challenging thing. I mean, mentally, emotionally, physically, all those kind of things, but also financially. But for a subset of people who had effectively been incarcerated in their homes for 6-9 months over that kind of 12-15-month period, they'd saved a lot of money. And they spent that money through, going on holidays when they could, going to concerts, going out for nice meals, entertaining, all the things they'd been denied, they spent a lot of money on. So we had that kind of absolutely fantastic bumper year. And it's interesting because I think now the sector as a whole is sort of, you're actually starting to see the lasting damage come out. I've been saying since kind of 2021, it's a good time to be investing in this space because there are going to be a lot of casualties. I've personally been incredibly surprised over the last 18 months how long it's taken for those casualties to come through. But we're seeing it now. We're seeing increasing numbers of insolvencies. We're seeing that fallout. And a lot of that is to do with the fact that support that was available was through debt. And that's fine when it was cheap debt. But all of a sudden, a lot of it is needing to be refinanced, and it's being refinanced at much more aggressive rates. So you've got these kind of zombie companies that staggered their way through COVID are now coming out of the far side and either need to be recapitalized and there's a fantastic opportunity, or are falling over because they just can't support the debt anymore. So I think, it feels to me that now is a great, because if you've got the money, if you've got that capital to deploy into things, there are some great deals to be done either on turnaround opportunities or to back businesses where they're growing, and they're growing because there's just less competition.
Yeah. And I suppose a large cultural and operational shifts, certainly in businesses, but in life in general. I mean, we're doing this over Zoom. I have to admit, I hadn't done a Zoom meeting prior to the pandemic. So there are these opportunities, these new opportunities that maybe weren't around or weren't, people weren't aware of them.
No, there aren't. But what's interesting is I think how transitory some of these things have been. So what's really interesting is, when we started working remotely, we stayed working remotely for a while. We opened the office again. We've come back in because we like the collaborative nature, and I think there's a real sense of that. And similarly, if you look at the leisure space, so many restaurant groups did kind of takeaway, make at home kits.
Yeah, that's it. Yeah.
And we all went, this is fantastic. We've all invented a new category of consumer good that we can push D2C. And it lasted about 4 minutes once the restaurants were reopened. Because what you suddenly realized is you're basically paying the same cost to get a meal that you then have to cook. Yeah. So it is interesting. I've been fascinated to see what things have stuck around and what haven't.
Yes.
But you're right. The ability to do Zoom meetings rather than constantly traipse around has transformed form businesses. For 18 months, once I'd set up Edition, I helped set up a new festival platform for a US private equity firm. And I spent 2-3 days a week traveling constantly. I'd fly out to Budapest first thing on a Monday morning. I'd fly back first thing on a Tuesday morning. And then on Wednesday morning, I'd fly to Barcelona or somewhere else. And it seemed glamorous for about the first 4 days.
You, eh?
Yeah. It is the world's worst thing. And all of a sudden, I was sat there going, oh my God, I could have done the introductory meetings and almost every other one I could have done on Zoom. I could have spent so much less time in Heathrow Terminal 3. And I loathe that place now. I mean... It's just a terrible, terrible place.
Are there any businesses that you wouldn't invest in now that maybe you would have done before? I mean, like lessons that you've learned over the last let's say it was challenging, but a challenging 3 years. So any investments, any types of business you wouldn't invest in now, maybe you would have done pre-2020.
Yeah, I mean, I think it's interesting because we've sort of sat down at the end of the last tax year end, so April, May time, and sort of said, look, what do we want to do with the next iteration of Edition EIS? What lessons have we learned? What do we not want to repeat? So we've tried to introduce some of the changes in the new product. But the first one, and it's really a reiteration, is we have to back the team over the idea in many respects.
Yeah.
But the team and the management team have to sit at the center of everything we do because you saw good businesses get close to falling off a cliff solely because the management teams imploded for whatever reason, whether it's interpersonal relationships or you don't have the right strength in depth, or you're reliant on one person, or they become a complete egotistical megalomaniac. The usual kind of mixture of entrepreneurial flares that you see out there. Yeah. But I think it's interesting. Paul Bedford, our chairman, sat there and went, the one thing he wants us to do is focus solely on that for the first kind of 40-50% of the due diligence is what are the management team like? What do they know? What do they don't know? When you ask them a difficult question, are they honest? Do they waffle? Do they try and find a way around it? So that was kind of relearning. The second big thing I think we've tried to focus on, and we're certainly focusing on from now, is we're going to start to only back profitable businesses.
Yeah.
It's easier for what we do. I absolutely get it. If you look at lots of other managers who are focused on the tech space or biotech or deep tech or whatever you want to look at, most of those businesses don't get to profitability before they're sold. But for us within leisure, lots of the business models lend themselves towards making profit pretty quickly and pretty sustainably. So my general feeling within the space, and particularly when capital is expensive, debt is hard to access, and capital is hard to access, is that you are so much better positioned as an investor with a portfolio where your businesses are default alive. So if they can't raise money in the next 12 months, they can slow their expansion plans. They can trim the fat a little bit, but they've got a solid business that can service its debts, pay everything as it falls due, continues to survive whilst other businesses crash and burn around. Whereas if you're backing businesses that are default dead, when the constant conversation is, well, what's my cash runway looking like? Is it in years, months, weeks, days? I mean, we've seen them in days. I had one come across our door the other day and go, "Oh, we've got cash runway till Friday." And I go, "It's Tuesday, you lunatics! Like, what do you expect us to even do?" Yeah. So you see a lot of kind of weird and wacky things out there, but that's our big driver here is, if we can back good management teams into kind of prove business models that are already profitable, it just feels a little bit less risky. It's
definitely.
We're not saying it's not without risk. It absolutely is still with risk, and we don't know what the market's going to do. But it feels like we're taking some of the problem children out of our portfolio if we'd just taken that approach.
Yeah, I was going to ask you actually what's most important prerequisite for investing in companies, but I mean I think you've just answered it there, and that's management teams and profitability.
Yeah, I mean, it's interesting. Yes, I think those are the first two. You've got to tick those boxes before we're even going to open the kind of the deck on what you're doing. Each sector is really different because each sector you're going to have. You're then looking at the fun bits. Like if I can tick those boxes, if I can get through all the bits, I'm going, those are comfortable. Then you get to start to do the stuff that's really interesting. Do I think that brand's got legs? Do I think the expansion plan's going to work? Can we grow this from a 5-site coffee chain to a 200-site coffee chain over the next 8-10 years? That's what gets you up in the morning, those kind of things, rather than just looking at management accounts again, which can be a bit dry.
I want to touch on something you mentioned a few minutes ago, and that's the festival platform, and also the other business that you have is Spotlight, because they are very much aligned with the investment management business of Addition Capital. Just can you tell us briefly about those two areas of your company?
I mean, I think it's an interesting one. So when the four partners set up Addition back in 2015, we didn't necessarily want it to be pure festival management. Sorry, investment management. It's part of the journey for us, but it's not the be all and end all. And in reality, the way I've always looked at this is there is an opportunity to build a collection of businesses that can support leisure businesses. Yeah. So it's kind of an ecosystem that supports entrepreneurs coming up with ideas all the way through to IPO, selling to major businesses, PE investment, whatever it happens to be. And if you can create the right ecosystem around those entrepreneurs, there's a fantastic opportunity to create value for shareholders, investors, advisors, everyone along the way. It's kind of mutually beneficial. And what we did was, we started Addition Capital, and it had two bows to its string. One was the advisory business, which focused on kind of advisory clients across leisure. And the other bit was this investment management piece. And we've recently spun off the advisory business rather, into a new vehicle called Spotlight Advisors. So it's kind of slightly refocused, much more focused on live entertainment, where we think we can add even more value than we otherwise can do, and where we think we can really take a business all the way through the gears from initial conception, doing the financial management, everything from. I mean, we loathe to do the kind of bookkeeping piece just because it's quite difficult and quite time consuming.
Yes.
If you're doing the higher value stuff, it's a little bit easier. But all the way through to M&A, corporate advisory, corporate finance work as well. So that's a really interesting part of the business. But the second piece is something that Paul Bedford and I are working on quite closely, which is a new festival platform. And it's something we've done a number of times before. We set up a business called Impresario Festivals back in 2012, which raised about £12 million, a mixture of institutional money and EIS money, and bought a series of festival brands. And the general concept was that we can bring together some interesting festival brands, we can help them grow, we can provide them the capital, we can create a nice portfolio that someone will want to buy. And we did that, and we sold about 2.3 times money for the original investors in a little over 3.5 years. Everyone was nicely happy with it. We sold on to Global Radio, who decided that if you ran radio stations, it was exactly the same as running festivals as well. And it wasn't quite as successful a strategy, I think, as they'd hoped it would have been. I only know that because we bought one of the festivals back off them at a vast discount about 3 years later, which is quite nice.
Excellent.
Yeah, exactly. But and we then did the same thing at a European level. We raised some money from a US private equity firm, helped set that one up, and it just feels that the UK market is ideally positioned for it. And from my perspective, festivals and other kind of music brand-led concepts, but really it's music festivals. And it's about creating, again, an ecosystem and environment for entrepreneurial, independently spirited promoters and putting the kind of right stuff around it. But from my perspective, it's all part of the kind of Addition family, whether it's Addition Capital, whether it's Spotlight, whether it's this new business, it all adds together. It's just choosing different points to help engage with those businesses. And it's interesting because, people often talk about who's your end customer. And, if you're Addition Capital, your end customer is going to be your investors. But if you're the Addition family, your end customer, in my mind, is probably the entrepreneurs. If you can help work with them at different points and get the right deals, they can come back time after time, because a good entrepreneur doesn't come up with one idea, sell it, and then sit back. They come back with 2 or 3 more ideas. And if they're part of your family, you get access to those really fantastic deals the second time around, the third time around. So we're really excited by that. I think there's potential opportunity to start passing some deals through from Addition EIS into this new vehicle. Kind of effectively using EIS as a breeding ground for fantastic deals. It works nicely for the EIS investors who've got kind of a 4-year investment horizon. It works for us who wants to deploy kind of larger sums of capital. So I think there's a nice business strategy there. I think there's also a fantastic opportunity in the next couple of years to do the same sort of thing within hospitality. We've got some phenomenal brands within hospitality that on their own nice numbers. I mean, various of them making well over £1 million a year in profit. Combine them together and you've got a really interesting business. And again, you can strip out some of that kind of duplicated cost. You don't need to have 5 finance directors if you've got 5 brands. You've got 1 finance director.
That's right. Yeah.
A couple of finance managers. So there's lots of cost savings as well as kind of allowing them to retain that creativity. So I think there's lots to be done within this space, which isn't just investment management, or it's about kind of coming on the journey and backing the space as a whole.
Okay. Now, it's always great to speak to you, Harry, but unfortunately, our time is almost up. So this is the time now that we give a blatant plug for the new for the new offer, Edition EI Scale Up Tranche. So this is open now. Pre-identified portfolio, as we've said, only back in profitable businesses and full deployment before the end of this tax year. So carry back is available. You're looking at time horizon, am I right? About 5 years, 4 to 5 years, maybe a little bit more on some of them.
Yeah, I think so. Yeah, 4 to 5 years, something like that. At their later stage, because of the nature of being profitable, so they shouldn't take the full 7 years.
Exactly. Yeah.
Profit used to do.
And the portfolios are going to be, is it about 5 companies? 5 companies.
Yes, correct. Something like that. Yeah, 5 or 6 companies. We pre-identified 5 already.
And HMRC advanced assurance as well on this.
Yeah, all of the companies all done. So I think the advice, listen, we can't, given the nature of Edition EIS, we can't do knowledge intensive approved funds, which I think lots of people are suddenly realizing aren't quite as happy as you were, because you still have to wait for the money to be deployed. Yeah. For us, they're all just pre-approved companies that would be deploying your money into in March or April, and then we immediately put the application in for your tax relief, and you get your tax relief in 2 or 3 months. So it's as clean and simple as we can possibly make it, despite the fact you're still going to get 5 certificates. I'd love it if they simplified it. Really,
it would be good, wouldn't it?
Yeah, it'd be lovely.
For both product providers, distributors, and investors themselves.
Yeah, I mean, I feel so sorry for the investors, particularly for investors who go into kind of SEIS companies and they've got 100 little bits of paper and they've got to go, I don't know where this one goes. But
although as yours are pre-identified and going to be invested before the end of this tax year, it's not like you could be potentially waiting, a while to get them. They should all come in within the few months.
We bundle them up, so you get one nice kind of envelope that arrives on your desk and goes, there's your 5 certificates, thank you very much. Now you can put it all in and it's all done for you. So,
and full details are available on the notes following this podcast. Great, Harry, as always, it's brilliant speaking to you. Thanks a lot, Harry.
Right. Cheers.
You take care. See you then. Bye-bye. Thank you for taking the time to listen to this episode, and if you would like more information on Edition Capital's EIS Scale Up Tranche, please check the notes for this podcast or visit Light Tower Partners website. As usual, you can also visit uniquemanagershowcase.com, where you will find recordings of previous webinars with Harry. Please like and subscribe to this podcast, and until next time, goodbye for now.
Nothing in this episode is intended to constitute as advice or recommendation, and you should not take any investment decision based on its content. Any opinions expressed may be subject to change without notice. Remember, the value of investments may fall as well as rise, and you may not get back the amounts you originally invested. Past performance should not be considered as a reliable indicator for future returns. Different funds carry varying levels of risk depending on the geographical region and sector they invest. You should make yourself aware of these specific risks prior to investing. If you're unsure about the suitability of an investment or you need advice on your specific requirements, you should seek professional advice.